Hi, everyone. This is Jason Burak of Wall Street from Main Street. Welcome back to another Wall Street from Main Street podcast interview. Today's special guest is a first-time guest. He's the chief analyst at PortfolioWealthGlobal.com. He also runs his own YouTube channel called Looking at the Markets, which has over 1 million views and 20,000 YouTube channel subscribers. I also just passed 20,000 YouTube channel subscribers. I know it is not easy to do. David Moadel, thank you for joining me.
Thank you, Jason. So we're both in the 20,000 club. That's great.
Yes. Are we supposed to get plaques or some?
Yeah, I didn't get mine yet. So let me know if you get yours.
Yeah, I'm not holding my breath. YouTube doesn't exactly like me. There was a phone call for 15 or 20 minutes with a YouTube channel consultant, and I pretty much just let him have it about 6 months ago.
Oh, wow. Okay. All right. All right. Okay.
Well, I was just like, how come my channel stopped growing at 1,000 new subscribers per month? And it's only down to like 100 or 200 new subscribers per month. And he was like, well, you provided me good feedback. He's a low-level employee. Poor guy. Anyway, though, they recorded that conversation. I'm sure his managers listened to it. So for our listeners who are not familiar with you, let's talk about your background first. You're a professional trader and options trader, right?
Yeah, stocks, options, cryptocurrencies, commodities, you name it. If it moves, I like to trade it. Thank you for asking. My name is David Moadel, and I am a researcher over at PortfolioWealthGlobal.com. And because I have a popular YouTube channel called Looking at the Markets, I've been approached for the past couple of years, actually, I've been approached by a number of newsletter companies and websites, but I'm very picky who I associate myself with. But I chose Portfolio Wealth Global as my home because, first of all, it's a free financial newsletter. People just can go to the homepage and sign up for it. And I love that because I can share my research with people no matter what their net worth is or what they're looking to do. It's great for savers, investors, and that's what I like about it. Also because they've made so many great calls, like with cryptocurrencies. In 2017, Portfolio Wealth Global was the #1 ranked free financial newsletter for that year for the cryptocurrency calls. Tom Beck, the chief researcher, called Ethereum at 15. Would have been nice to get in then, right? Litecoin at 25, Dash at 35. He called Cardano at around 4 cents. So, and I also share many of his foundational beliefs. For example, I believe the government's too big and the central banks don't always have our best interests in mind, believe it or not. I think you can believe that. And the people need to know how to self-educate and position and prepare themselves for what might come. And so that's why I'm glad to be part of the team.
Yeah, if you've seen the content on my YouTube channel, you know that I'm not a fan of any of the central banks. So there's people out there who criticize 1 or 2 central banks. I'm criticizing all 5 or 6 of the major central banks. I think, in fact, I'm friends with Nomi Prinz. She just put out a new book called Collusion, and she lays out the arguments how the big 5 or 6 central banks, except for the People's Bank of China, are all colluding and working together.
Yeah. Yep. Very true.
So let's talk about, I know you've covered the dollar and gold, so let's talk about the dollar index. The dollar index, I've done short videos on this in the last month or so. The dollar index was testing key support levels at 88. Yeah. It almost broke those key support levels. Had it broken the 88 support levels, it would have maybe crashed down to 79, and it hadn't been to those levels in years. But the dollar has had a really strong rally. So do you think this dollar rally is going to continue in the short term?
Well, to call it a really strong rally, I agree with you in the short term, but I don't want to be short-sighted. I like to pull back the chart and look at the big picture. Yes, okay, in the last few weeks, the dollar has done quite well for itself. But we're still looking, if you pull back the charts, at so far, well, I want to see higher lows and higher highs. I'm just not seeing that right now. And keep in mind, again, big picture thinking. Currently, the dollar is still pretty close to a 3-year low. In 2017, just that 1 year, the dollar fell by around 10% against the currencies of its trading partners. I don't like taking a 10% haircut in 1 year. I don't know about all of you guys listening to this, but and with the government has not stopped printing money. So the central banks have not stopped doing their shenanigans. Inflation is still likely to rise. I believe in that. Personally, I expect inflation to reach between 4 and 7% in the coming years. So anybody who believes because of this short-term rally that cash is king, or that the dollar is going to continue to be the reserve currency of the world for much longer, I have to disagree with you. And, I don't like to see people be victims of head fakes, and the markets will head fake you. I think we can both agree on that. The debt to GDP ratio in the United States is now more than 100%. It's pretty pathetic. And the value of any currency is based on trust in the stability of the nation's economy. So it would not surprise me at all to see the dollar very quickly lose its status as the world's reserve currency and become, business as usual, get back to business as usual with inflation, with normalization of, coupon rates, treasury yields. It's just going to continue to wear away people's savings, their 401ks, 403bs, IRAs, and so on. It's really a shame. Retirees are victims. Savers are victims. Anyone who has seen the value of their dollar go down and down and down over the years. And now with the price of oil going up, again, another sign and symptom of inflation doing its dirty business. So no, I'm not a fan of the dollar at this point.
Yeah, I mean, in the short term, who knows what can happen? Almost anything can happen. But I think there's a couple things going on with the dollar. So if the dollar gets too strong, it'll cripple emerging markets. There's over $10 trillion in emerging market U.S. dollar denominated debt outstanding. And so that could potentially collapse emerging markets, either foreign governments, foreign corporations, foreign banks that have drastically overborrowed irresponsibly, I would add, in U.S. dollar terms. And they know they can't pay it back. But, as long as interest rates are low and their currency is strengthening against the dollar, they can pay back their loans in cheaper terms. But if the dollar rallies too strong, then that would collapse things. And we've seen that in the past, decades ago. The other thing is President Trump and also his Treasury Secretary, they don't want a strong dollar. They don't want a strong dollar. President Trump wants to use mercantilism. He wants to reduce the trade deficit. And so the easiest way that people in the Treasury Department and government economists do that is by drastically weakening a currency.
Yeah, it's true. And by the way, if people are thinking, okay, so we've talked about cash is king. I don't believe that. And you mentioned treasuries. If people are thinking that, I'll just go into bonds. Okay, well, let's talk about, another broken promise from central banks, from the government. The bond market is toxic right now. Rising inflation is highly destructive to bonds, as we both know. The economy is already seeing evidence of rising inflation from oil prices doubling recently. Companies are raising wages right now. People are actually quitting their jobs at record levels. We haven't seen that in a while. And as we know, more employment has historically meant more inflation. Example, Jeff Gundlach, the bond god himself, sees commodities actually, not bonds, not cash, but commodities as the best play for 2018. And indeed, commodities have been the best play for 2018 so far. We at Portfolio Wealth Global have actually profiled 2 oil plays that are up 50% now. And soon we're going to roll out our top MLPs, that's Master Limited Partnerships, for 2018. So I believe it's a phenomenal time to look at the commodity space in general. And if people want to learn how we're positioning ourselves, they can visit portfoliowealthglobal.com/bonds, BONDS. Because I believe it's time to move out of bonds, out of cash, and into high yield plays like MLPs, for example, which are actually mentioned in that report.
I actually covered MLPs a couple years ago when I was an energy analyst. That was my day job. But Jeff Gundlach, that's interesting you brought him up. Yeah, he created a separate gold stock fund, I think. So he's really bullish on gold stocks. So yeah. I don't know in the short term what his gold price target is, but I know in the long term he's one of those big Wall Street guys that you wouldn't think would be bullish gold that is actually very bullish gold.
Yeah, it's a very interesting situation. Speaking of gold, I mean, yes, okay, we've seen some pressure, well, I'll call it politely, and that can be very diplomatic, okay, some pressure in the precious metal space. Right now I've got gold struggling at that $1,300 level. It's around the low 1290s, silver in the low 16s. Yeah, it's tough. You've got to be nimble. I believe in holding precious metals, silver and gold. I'm into silver right now due to the gold to silver ratio being so high. I believe there is going to be a reversion to the mean. So I'm holding precious, reallocating toward the silver, the physical, as opposed to the gold. That doesn't mean you can't have both, of course. But you have to be nimble. And, if you're going to hold the physical stuff as a store of value, I think it's a great way to go. I also do believe in buying particular mining stocks. That's just my own personal preference. It's a quicker way to get yield because I think we can both agree that holding precious metals, even though it's a great hedge, great store of value, not the quickest way to get those, 2-baggers, 5-baggers, 10-baggers. Would you agree on that?
Yes, I totally agree. I actually really like the gold and silver, precious metals, royalty, and streaming companies. There's about 5 large ones. And actually, the more that gold and silver prices get smashed, the more deals that they can do for cash flow. So if you look at a chart of Franco-Nevada, the gold price, which is the largest one of these, the gold price has basically done nothing, not even flat for 5 years. And Franco-Nevada shares are up 73%. Since 2007, David, Franco-Nevada shares are up almost 400%.
So I think we both agree that if you're picky and choosy about those mining stocks, you can outperform obviously the equities markets in general, and you can combine that with a safer physical precious metals ownership, which Tom Beck believes in, chief researcher at Portfolio Wealth Global. I believe in it. And there are many ways to play it. For example, it doesn't have to be gold and silver stocks. There's a particular lithium company that I've been looking at a lot lately. I'm sure you've heard of it, Wealth Minerals Corp, which has been mining lithium in Chile, which not a lot of people know. Chile is the Saudi Arabia of lithium, which is necessary for electric cars. They produce 33% of the world's lithium supply. And actually Wealth Minerals Corp has entered into a strategic alliance with INAMI, which is the fully state-owned national mining company of Chile. Because not just anybody can mine for lithium in Chile. You actually have to have a government partnership. So this will actually enable this company to meet the world's growing demand for lithium. This is a stock that's up 13% since we called it at Portfolio Wealth Global, since we started covering it. I think it's got a long way to go, a lot of upside. So again, if people are curious, it's Wealth Minerals Corp. The stock ticker in Canada is WML, in the United States, WMLLF. And we have a report, portfoliowealthglobal.com /lit. That's /LIT lit, short for lithium. If people want to learn how to play these precious metal stocks, get into the electric cars space, which I think has huge growth potential, and how to do it for some real yield, some real growth.
So we're recording on Tuesday, May 15th, 2018, and the gold price, like you said, is struggling to stay above 1,300. It actually is at 1,290 right now, around 1,290 right now. Silver is a little bit above 16. I was watching, unfortunately, I happened to have CNBC on when I was finishing up my lunch a couple hours ago, and they had a couple, talking head traders on, and they were saying gold's going to break the 1,280 support levels, and it's going to test 1,210. So do you think that's probably a contrarian indicator that this correction in gold might be over soon?
I think it's a contrarian indicator when analysts start talking, when they open their mouths. You know what I use? First of all, if you're going to go by what those talking heads on those, that particular channel you mentioned and the other ones, they're not, you have to remember what their job is. They're not in the business of helping you or helping me. Same with the article writers out there, same with the analysts. All right. They are lagging indicators. When something is down, they say it's going to go down. When something is up, they say it's going to go up. Look, I get into this space depending on how I feel about the industry as a whole. And like I mentioned before, I don't just buy the physical. I also get into specific mining stocks. But there's a thorough, I vet them very, very carefully. Tom Beck, the chief researcher here, vets them very, very carefully on certain criteria. I believe almost any time is a great time to hold the physical stuff. If you're just going to do that, that's perfectly fine. But again, I am reallocating more toward the silver because when you get the gold to silver ratio above 80, which has only happened 4 times since we got off the gold standard in the United States in 1971, there usually is a reversion to the mean. So you got to think long term. You got to think, okay, what's probably going to happen over time? Let's see, is cash going to be a great thing to buy and hold over time? Bonds? No, not so much. How about something that works in the opposite of direction of cash? How about something that can benefit from inflation over time, which is inevitable, in my opinion? Well, precious metals really are, and commodities really are the way to go. So no, I'm not going to listen to the talking heads out there. I'm going to think for myself. I'm going to use the research. I'm going to make my own decisions. I recommend everybody else do the same.
But they wear such expensive suits and they sound like geniuses. I mean, I wonder how much time they spent, rehearsing those talking points before they go on TV.
Yeah, and I love how they. It's so funny. Like you'll have people who recommend certain things and then recommend certain other things, and then they come back and they only mention their winners. They don't mention the losers. They conveniently forget about that. All right, and so once again, when an analyst or an article writer or a talking head makes a poor call, what do? Do they blame themselves? No, they blame the company.
Yeah.
When analysts and their consensus on what the earnings per share should be for a particular company is too high, and then the company, their actual earnings per share is lower, what do? Do the analysts say, you know what, I think I should quit my job. I did a terrible job of predicting. No, they blame the company. That's what these talking heads do, because they don't want to lose their job. They want to keep their job of bashing companies when they're down, promoting companies after they went up 10, 20, 30, 50%, being a lagging indicator. That's what they do best. And, it's not my can of worms.
and they also don't bring up the long-term track record of a lot of these guys. There was a CNBC guy on one of the Fast Money. He wrote a book about Bitcoin, and he was all in on Bitcoin and Litecoin when Bitcoin was almost at 20,000, at like 18 or 19,000. He said he was all in on that position right as it was about to crash. So,
nice.
He should have been buying it a lot sooner than that.
Yep. Cryptocurrency, it's interesting. People who got in November, December of 2017, now they're a little disappointed. They're victims of FOMO. It's okay. If they want to hold on to it, if they're just willing to admit my timing was bad, people shouldn't listen to me anymore. Meanwhile, Tom back at Portfolio Wealth Global called Ethereum at $15. Okay, Cardano at around 4 cents. So you can listen to people with a poor track record and a shiny suit, or you can listen to people who put out the information. Their track record is public and it's consistent. Totally your choice.
Yeah, and the other thing about people on TV is I have a friend, I won't name his name, but he actually wastes like 5 or 6 hours like commuting down to the stock exchanges to get on TV for 2 minutes. So he wastes like half a day just doing that to be on. He likes being on TV. So
wow, okay. Hey, if that's his thing, if it's worth it to him, then hey, I hope it's worth it.
I don't think it's worth it because they put a bunch of makeup on you, so I'm not really into that stuff.
Yeah, I'm not feeling that. Not feeling it. I'd rather just have my YouTube channel and my position in Portfolio Wealth Global, putting out the information. I don't have to put my face on everything. Just like your podcast, you're putting out amazing information. You're in it to help people. You're not in it to. As a YouTuber, I'm sure the gains aren't massive. So obviously we're doing this because we love it.
Yes. So let's talk about the VIX. The VIX has been a very interesting debate. There's a lot of professional hedge fund managers now that are on the Chris Cole of Artemis Capital camp, that there's this massive leverage short volatility trade over $1.5 trillion in size. We had a huge spike in the VIX in early February, and since then, if you look on a chart of the VIX, if you look on a year-to-date chart, it looks like it's in a downtrend, but if you look on a chart of the VIX for 1 year, 2 year, it looks like it's finally making higher lows. So what are your thoughts on the VIX?
Yeah, here's the thing. Fear cannot stay in the markets in any sustained way for any long period of time. And I know everybody says, what about 2008? Even if you look at the VIX in 2008, yes, it reached 80, almost 90. That's true. Not for very long, okay? That's what the VIX does. It has massive spikes from time to time, and then it comes right back down. And so people who want to go long VIX products, UVXY, TVIX, VXX, so on and so forth. They're playing a game, and I get these questions all the time when people email me. And by the way, people can email me, davidmoadel@gmail.com, if they have any questions about any of this. I'll be glad to try to answer questions as best as I can. The job of these long volatility products is to go down over time with occasional spikes that cannot be timed, cannot be predicted. So you're fighting against contango, and there is contango now. I know we were in backwardation back in February, early March. Look at how long that lasted. All right. Look at the performance of VIX products over 2016, 2017, when the VIX went into the eights, when it had an 8 handle. People thought, oh, it can't stay there. It can't stay below 9. Well, it did. It did for long periods of time. And people who tried to fight contango, tried to fight the fact that human nature, we cannot stay in a fear state for very long, even in the worst of times. So people who try to bet against the market by going long VIX products, they don't do well over time, just because of the roll costs, the contango, and they're fighting against how human beings are wired. So yes, we've got the VIX. I've got it in the 14s right now. It wasn't long ago that it was in the high 30s. People thought this was a new normal. We're going to have the VIX in the 20s and 30s. Well, I hope they didn't put their money where their mouth was, because they're not doing too well right now.
So we can have a lot of asset price volatility. We can have a lot of chop in stock markets with the Dow going up 2% one day, 2% down. And you're saying that really wouldn't affect the VIX products that much then?
Then you've got the fact that, and people probably know about this, where if you hold an asset that goes up 1%, down 1%, up 1%, down 1%, if it repeats that a number of times, you actually end up below. People think you end up where you started. No, you end up below where you started. Okay. So that actually eats away at these VIX products as well. So if you look at the chart, the VIX itself has been going down. And yes, I know it perked up today, but just I believe in pulling back the chart. Okay. Over time, these VIX products, they go down. Look at a 1 year, 5 year, 10-year chart of any of these VIX products. They don't do well. Yes, there was the vol-apocalypse, quote unquote, okay? Yes, we lost XIV a few months ago in February, all right? SVXY survived, though. I have to give credit to ProShares for actually having that product survive. But for people who've been attempting to short these vol products, okay, yes, there are down moves, 1-2%. There are also the up moves, and you're going to get chopped around. You're going to get what's known as beta slippage, which is that phenomenon I just described about, when you hold on something that goes up 1%, down 1%, up, down, you lose money. You end up lower than when you started. Try it. Pull out a calculator, take a number, add 1%, subtract 1%. Do that 10 times in a row. You'll see where you end up.
It sounds like, David, sorry to interrupt you, but it sounds like these things weren't designed the way that a lot of people thought they were supposed to be designed. So normal, as someone who, I don't trade a lot of these types of ETFs and options, but I would think that when there is volatility in the stock market with 2% up, 2% down, that should be good for the VIX. And you're saying that the product was not designed that way. So that's why a lot of people are confused.
Right. People don't read the prospectuses when they buy these products. I know they're boring. I know the letters are small, hard to read. Gee, you think they maybe do that on purpose? I don't know. But
yes.
These products are meant for day traders, basically scalpers, people who buy and sell the same day. Fine, but the roll costs, even if you hold for a day, will eat away at your returns to the point between the contango, because when you buy UVXY, you're paying managers to buy and sell futures contracts, and they have to keep, when there's contango, and there's a state of contango right now, you're paying them to buy futures contracts down the line that are more expensive than they are now. And so they have to keep, because they expire every month, all these VIX futures contracts. And so therefore, they have to keep rebalancing every day at the end of the day at 4:00 p.m. Eastern time when they ring that bell on the New York Stock Exchange. They have to keep buying higher, selling lower. It's not good. Combine that with the beta slippage we talked about. and the fact that fear doesn't last very long. People are adaptive. We adjust to bad news when we realize, yeah, the world isn't ending. Okay, all right, Trump tweeted this. Kim Jong-un said this. Whatever. Putin said that. Well, wait, no, it's not the end of the world. Things are going to be okay. You know what? The market tends to march upwards over time. It does that. You don't have to get shaken out every time of your position, every time there's chop. Yes, there's bigger chop this year than in 2016, 2017. Doesn't mean that VIX products are a winning strategy.
That's very interesting. I'll just watch the charts on the VIX, but I'm going to avoid that. So it would seem then that there would be other ways to play that to go after those VIX, because intuitively a lot of people would look to the VIX, but like you said, it sounds like those things were designed like GLD and SLV. If you read the prospectus, there's problems with those too. So as someone, David, who trades the markets a lot, what is your opinion of how technology just in the last decade has changed trading? So in the last decade, there's been an explosion now of a lot of high-frequency trading algorithms. There's not even a lot of human beings. If you look at the floor of the New York Stock Exchange, there's not even that many human beings there anymore compared to what there used to be. It's mostly, those servers, those trading computer programs. And there's a couple guys that set the algorithms once or twice a day, make sure that none of them go out of whack now. So do you think this is bad for markets?
Bad for markets if you don't believe there's manipulation going on. Sure, it's bad. It's bad for retail traders because they're unaware of these things. It's also bad for people who have 401ks, IRAs, 403bs, pension plans. They're just leaving their money there and hoping that things will take care of themselves. Don't count on it. That's another broken promise. If you can be nimble, if you can focus on great stocks, great companies, as well as precious metals and cryptocurrencies that have growth potential, then you don't have to worry about algos. But when you look at charts nowadays, compared to how they were before the HFTs, the high-frequency traders, started taking over, you'll see charts are different looking. You'll see it's a lot more jagged. If you can picture this, I know this is not a visual podcast, but if you can see, look at old charts. Look at charts from the 1960s through the 80s, and they have much more of a smoothing, consistency to them. Whereas now you see it's more angular. The moves are more sudden in the charts. And if you get used to that, if you watch charts day after day like I do and like we do at Portfolio Wealth Global, you can see the angularity of it. You can spot when the HFTs are at work. You can actually see a move and say, oh wow, okay, yeah, that wasn't retail traders all being of the same mindset at the same time, thinking the same thing. Don't get me wrong, when really bad news hits, that can cause a sharp, sudden move. But when it seems to happen for no apparent reason, nothing happens for no reason. There's a reason for everything. And when there's collusion, when there's high-frequency trading, you can see it in the charts. You just have to know how to look for it and how to act upon it.
Eric Hunsader of Nanex, and he tracks like nanosecond charts, and he was talking about silver was manipulated for years like this and a lot of other markets. But I think that high-frequency trading has created a lot of artificial volatility in stock prices and ETFs that would have not been there in the past.
Look at Volpocalypse, quote unquote, that day when the spiders, the S&P 500 went down over 4% in one day. Okay, it happens. This is going to happen from time to time. But the fact that the VIX products went down so much in one day that XIV got wiped out, and SVXY almost got wiped out. It got cut by 90% in a day. These things shouldn't happen. It shouldn't behave like that. A lot of the price action took place after hours, as I'm sure you know, when most retail traders don't bother to even look, not to mention actually trade. And options traders don't even cannot get involved after a certain point in time. So, is there manipulation? Is there collusion? I'll let the listeners decide for themselves. But again, just look at the charts. You can spot the algo trading if you know what to look for.
Yeah, and I've heard stories from a lot of professional traders that, basically these high-frequency trading algorithm, these large hedge funds that use these machines, they pay to see order books. Some of the broker-dealers even have these trading systems and use it against their own clients. So they blow out stops, and basically they spoof on, we were talking about this before we started recording, on the level 2 quotes, so those are no longer accurate because the high frequency trading algorithms are allowed to pull bids out, whereas in the past, you were not allowed to do that.
Yeah, it's amazing that it's legal, but it is. It's so funny. Like the SEC and FINRA, sure, they want to get involved when somebody wants to put together a Bitcoin ETF, a cryptocurrency ETF. Oh no, that's too risky, too prone to manipulation. Oh, really? Okay. But meanwhile, the spoofing that you're talking about, people working against their own clients, that's okay somehow. Okay. Things that make you go, I think you might agree with that.
Yeah, I mean, I completely agree. The more I learn about the financial system, the more I learn that there's just pervasive people who lie and fraud and are willing to do basically almost anything to make a buck, even steal from their own clients.
Yeah. No, it's a shame. And that's why people need to avail themselves of research and make their own decisions. Just leaving your money with, just walking into a Bank of America or Wells Fargo, requesting the services of a financial advisor and assuming that they have your best interest in mind rather than trying to sell you something. That's not the way to go. And so the days of being able to just trust somebody with your money rather than know what you own. This is the age of know what you own, watch what you own, and if somebody doesn't have your best interests in mind, fire them quickly, and avail yourself of the best research out there, which is what you try to provide and what I try to provide on a day-to-day basis.
Okay, David, so I know you cover marijuana. Why do you think marijuana is going to be a very good long-term investment?
Oh, that's a great question. Yeah, there's been I'll call it a corrective phase in cannabis stocks recently. That's a polite way of putting it, right? They found a short-term top in January, and it's been a rough go of it recently. However, I still strongly believe in the growth potential of the cannabis industry. And actually, I'm more than happy to shop for my favorite stocks at discounted prices. That's how I'm looking at it. The crucial thing is to be selective in choosing only the best cannabis stocks for your portfolio. Right now, both researcher Tom Beck and I are looking at a particular cannabis company. I'm not going to announce it right now, but it's made up of the most vetted shareholders that I've seen funding early-stage cannabis companies in the past 4 years. So in the next month, we're going to be planting the flag over at portfoliowealthglobal.com at the newsletter for this particular opportunity. So I recommend people look out for that one.
Last question before I let you go. So we're not quite halfway done yet with 2018. What do you think are important trends or things in markets that people should pay attention to for the rest of the year?
Sure. I'll mention 3 of them. First of all, cryptocurrencies. We at Portfolio Wealth Global, we called Bitcoin at $9 and it went to nearly $20,000 per Bitcoin. Now we're not viewing that as a bargain so much anymore. It's not under the radar anymore, and we're looking for under the radar opportunities. And it's just not, Bitcoin's not where it's at for us anymore. I still love Bitcoin. I love blockchain. I love the technology. But I'm looking, and Tom Beck is looking at Ethereum right now instead. First of all, we know who the founder is and we can find him. All right. He's identifiable. With Bitcoin, who is the mysterious Satoshi Nakamoto? Okay. We can debate that, but with Ethereum, we know who the founder is. We know he's brilliant. Ethereum is backed by Goldman Sachs, major corporations like Microsoft. And I don't think I need to tell you that Bill Gates knows a little thing or two about identifying revolutionary technologies, okay? So throughout 2018, we're going to be announcing our top cryptocurrency picks, Ethereum and other under-the-radar cryptocurrency opportunities. Because, again, we suggested a number of cryptocurrencies that have become 2, 3, 4, 5, and 10 baggers. We called Monero, which is up more than 300% since we called it. Steam is up over 1,400% since we initiated our buy suggestion. So we're always looking for the next one. Second, precious metals. We talked about the silver opportunities in physical silver as well as the miners. We talked about lithium and that report, but Tom has been adding physical silver to his portfolio. I believe it's a great store of value. I don't believe there's any financial time in history when owning precious metals and especially silver bars and coins as an insurance from government inflation has been the wrong move. And today I think it's even better because the gold to silver ratio is so high. Silver is 66% cheaper than it was 37 years ago. No other commodity is as cheap. I could easily imagine this ratio returning back to the mean, and that would mean silver could realistically trade at $35 or even higher within 14 months. That's what we found at Portfolio Wealth Global. And then finally, for stocks, Tom Beck is carefully selecting undervalued, under-the-radar stocks. Some of the biggest gainers we've had have been in the mining sector. We talk about portfoliowealthglobal.com/lit if you want to learn about lithium. Tom Beck has analyzed over 309 mining companies, all right? And actually he's got another one that has a potential for 300 to 500% growth within the next year or two. Again, we're looking for those 3, 4, 5, and 10 baggers. And Tom's pretty picky with his investments. So if you want to see his entire portfolio, take a peek at it. You can go to portfoliowealthglobal.com/portfolio. That's /portfolio. For free, you can get an insight into what his research is and exactly where he's positioning himself throughout 2018 and beyond.
And you have a lot of interesting videos that are educational on your YouTube channel, also talking about trading.
Yep. Yeah, I do. And that's looking at the markets, or just, go to YouTube, type in David Moadel, Moadel, and, check out all my videos. Like you, I'm a YouTuber. We're both part of that 20,000 club, whatever that means. And, we do it because we love it. We're trying to help people. And because YouTube is not likely to make you rich unless maybe you're, Logan Paul or somebody like that, PewDiePie, maybe he's getting rich off of YouTube. But most of us are doing it because we love it and because we're interested in helping out not just the wealthy. No, we're looking at the retail traders and investors. How do you start? Where do you allocate your funds in a way that's safe and poised for growth, especially if you don't believe in just handing over your money to a money manager and hoping for the best, because that's not a recipe for success in my estimation.
Yes, and it sounds like you're not just a pure technical trader. It sounds like you combine fundamentals too. So normally some of the most successful traders I've ever interviewed and met in person combine fundamental and technical analysis.
Yeah, and it's perfectly okay to do both. In fact, I recommend it. Why not look at both sides of the coin? Why not look at the fundamentals and the technicals? It can't hurt you to do both. Yes, you've got Elliott wave traders. Some of them only look at the technicals and they consider the fundamentals to be noise in quotes. But you know what? To me, I believe know what you own. Even if you're a short-term trader, and definitely if you're holding for the long term, know what you own. Know the company. Who's in charge of the company? Do they have a vision, a real vision? Is the company consistently profitable? How do they do when it comes to fundamentals? How do they do with their business model? Things like that. So you're not just owning a stock ticker. You have a piece of a company, or even a commodity, even oil, or gold, or silver, or wheat, whatever it is you trade, cryptocurrencies. Even though it's not a company and it may not have an identifiable leader, Bitcoin, right? Still, you can judge it by its fundamentals. Where is it going? What's the vision? Who owns it? Why do you own what you own? And where's it going? Okay, so you're not just looking at a chart. Yes, you are looking at it, but you know so much about what you own that if somebody walked up to you on the street and asked you on the basics of Apple or Microsoft or whatever it is you own, you can tell them where's the headquarters located? How old is the company? Who's in charge of it? What's his vision? Where's the company going, and why? Why do you own it? Not just because of a chart. Why do you own it? What's great about this stock, cryptocurrency, commodity, whatever it is? You have to know the answers to these questions before you hit that buy button.
And to add to your points there about people who are just pure technical traders, you mentioned Elliott Wave. I think Bob Prechter is one of the most prominent figures in the Elliott Wave community, and he's been calling for the stock market to crash for 30 years and to stay at low levels. So he was, when the stock market crashed in 2008, he was saying it was going to go even lower than the levels it was at and it was going to stay there. for a long time, and look what the central banks did. So
Yep.
you gotta, and that's fundamental analysis, looking at what the central banks did, because they're distorting everything.
Yeah, and you brought up a great point there. You also have to look at the macro environment. So you're studying not just individual stocks or mining companies or whatever. You're studying, every day. You're looking at the spiders. You're looking at the Qs. You're looking at the diamonds. The Dow, the Nasdaq, the S&Ps. You're looking at all those. You're watching the VIX every day, as we mentioned. You're watching the dollar index compared to other currencies. You're watching cryptocurrencies. Even if you never plan on owning cryptocurrencies. I'm a big fan of Warren Buffett, but when he says he doesn't understand Bitcoin, that bothers me a little bit. Why not read up on it and at least understand it, even if you don't like it? How can you really dislike something that much if you admit that you don't understand it? So all respect to Mr. Buffett. I'm a big fan of his, but I got to disagree with him. I believe in understanding all parts of the market, and that's why I call it Looking at the Markets. That's why I call my YouTube channel that, and that's why we cover so many different things, as you do on your excellent podcast.
Yeah, and I agree with your analysis of Warren Buffett. I mean, I think he's a great value investor, looking at like cash flows of a business and things like that. But he's just gotten so political the last couple decades. Before he made his billions of dollars, he was not this political. He was just a value investor who was looking for undervalued businesses with cash flow to buy. He didn't make political comments. Now he's just anti-gold. Him and Charlie Munger, anti-gold, anti-Bitcoin, calling people names who like gold and Bitcoin. It's gotten ridiculous.
Yeah. He's mentioned what did he say? That if you put all the world's gold into one block, you could what could you do with it? You could just stare at it.
Well. But he tried. It's disingenuous, David, because he tried like 20 years ago to corner the silver market. Like, most people don't know this, but he hired LBMA brokers, and he was the one who bought 100 million ounces of physical silver. And from what I've heard, he was ordered to sell that silver, and that's how the SLV came into play. They had to park the silver there. So this is a guy that did go into gold and silver. He just went into silver many years ago. He won't talk about this, by the way, but there's tons of evidence if you know who to ask or where to look.
Yeah, exactly. So, again, I'm a fan of Charlie Munger. I'm a fan of Warren Buffett, all those guys. I believe in, Ben Graham's intelligent investor philosophy and buy low, sell high. That's foundational at Portfolio Wealth Global. It's foundational for my videos at Looking at the Markets. But to have an attitude about precious metals, just kind of a blanket statement about them, or a blanket statement about cryptocurrencies, admitting you don't understand Bitcoin. It's okay to disagree with your heroes sometimes, and this is an instance of that.
Yeah, I mean, if they had a sound argument rather than name calling people, I would respect that. But they're not doing any of that. They're just calling like anyone who owns gold or Bitcoin's a moron.
Right. Yeah, and I wholeheartedly disagree with that sentiment. I believe. I mean, come on, gold's been around for over 5,000 years. You wouldn't just stare at it if you owned it. It is useful in tough times. When the what hits the fan, it's going to be even more useful. It's going to be even more precious. They're called precious metals for a reason. Same with silver. Silver and gold have been around a lot longer than Warren Buffett's beloved Coca-Cola. All right, and they're better for you, I would imagine. So there you go. All right, but again, this is not to put down. This is not pick on Warren Buffett Day. I still am inspired by him and other heroes. So don't get the wrong message.
Yeah, Stefan Molyneux would say that Buffett and Munger didn't make an argument, so they just started name calling. But I mean, Warren Buffett's dad was actually a big gold bug. He was actually the Ron Paul of congressmen before, so it's just really sad how Buffett has changed. But he did go to Ivy League schools for his MBA program, so I'm not surprised.
Right.
Well, David, I really enjoyed talking to you, getting your perspective about technical analysis and combining fundamentals and technical. So if our listeners want to follow more of your work, how do they do so?
Thank you so much for asking. Again, it's portfoliowealthglobal.com. And Looking at the Markets is my YouTube channel. And they could always email me, davidmoadel@gmail.com. That's David, Moadel, @gmail.com. Feel free to go to portfoliowealthglobal.com, sign up for the newsletter, check out the reports. I think you'll like them.
Great, and we'll have to have you again on again in the near future. I think you provide some interesting analysis there. It's not a lot of technical traders just don't look at fundamentals anymore. So I really enjoy speaking with people who can combine them and have some interesting perspectives like yourself.
Absolutely. Thank you so much. I appreciate it.
Please like this video, share it with friends and family, and don't forget to subscribe to the Wall Street from Main Street YouTube channel if you have not already done so. We're closing in on the 20,000 YouTube channel subscriber milestone despite YouTube censorship, and hopefully we'll be able to get to 30,000 or even 40,000 YouTube channel subscribers quickly if YouTube doesn't shut down the channel. If YouTube does shut down this channel, remember to also sign up for the Wall Street from Main Street email list that's on the wallstreetfrommainstreet.com website and will tell you where the videos are going to be uploaded instead of YouTube. Also, if you really like the content and you decide that you want to give a one-time donation, you can go to the wallstreetfrommainstreet.com website where there's different options for you to do so. Or you can become a Patreon contributor. Thanks for listening, and I look forward to providing you guys with some of the best information, analysis, and financial education available out there for free or paid.